Tatenda, Grant, how is your fund different from other mainstream investments and other alternatives out there?
In the fund, we really trade all asset classes. It's however important to stress that there's no dilution of specialization. We trade all asset classes, equities, fixed income, FX, commodity markets at a very granular level, whether it's trading grains or maize markets or interest rate derivatives or FX currencies. We're really trying to provide specialist skill sets in a number of strategies, markets, and asset classes. This, we believe, is the best and most persistent way of being able to deliver for our clients. The founding principle of the fund is really about diversification with regards to the assets that we receive and manage on behalf of the clients. Ultimately, we are risk managers first and foremost, and we have to allocate risk capital with regards to the investment opportunities that we see. So in the context of managing the fund, every opportunity is broken down into the risk and the return characteristics. And we have one overriding philosophy. Are we being compensated enough for the risk that we take? And that has to fulfill a number of criteria. It could be price volatility, market risk. To some extent, it could be more risks associated with regards to the performance of the underlying assets as well. We have to also be focused on getting true diversification. That means having many different drivers in the portfolio and to create a portfolio which is diversified across a number of factors as well. The fund is really focused on the identification of global or macro thematic themes, which we express across a number of investment classes and strategies. So we trade equities, bonds, FX, fixed income markets, and we trade these instruments at a very granular level. We trade grains and seeds markets, we trade fixed income derivatives, we trade equities for a number of investment strategies as well. So there's no dilution of specialization with regards to any of the asset classes that we participate in. What we're ultimately trying to do is to build a portfolio which is diversified across a number of investment strategies with regards to equity, fixed income, FX markets. The spectrum is as wide as our imagination is long. So in that respect, what we are trying to find is independent, uncorrelated investment opportunities where we're able to put together in the context of a multi-strategy, balanced and diversified fund, where the drivers are not necessarily all the same all the time. This really helps to achieve that whole notion about being able to offer clients an absolute return fund, meaning that sometimes we're able to grow the capital a little, sometimes a lot, but the focus is certainly to always try and grow that capital base. With regards to the hedge fund characteristics of hedging during market drawdowns, certainly because we are looking for many different opportunities, mostly on a relative value nature, utilizing those tools of modern finance with regards to short selling, the use of derivatives, all with an overarching goal of being able to find better risk-adjusted returns with regards to the investments of the clients.
The fund has a moderate risk profile. We target a volatility target of 5% to achieve a steady plus 5% return annualized over a 3-year investment period. We believe that the fund is the hedge within an investor's balanced portfolio because the fund is lowly correlated to traditional investments and also offers downside protection, which should help with drawdowns in negative markets.
The fund is a true multi-strategy fund in the sense that there is no bias toward equity or fixed income competencies. We treat all asset classes and all investment opportunities equally, the return for the risk that we take. In that respect, we believe that we're able to transact across a number of asset classes and in particularly also focus on the cross-asset linkages, how one view in one commodity impacts interest rate derivatives or equity product markets. So we always try and look for linkages with regards to the asset classes that we focus on. We're risk managers first and foremost. We believe in the allocation of risk and not capital. There's no static allocation to domestic equities or nominal bonds. It's really inherent about the investment opportunities that are driving specific positioning within the fund. So we manage for the risk, we target for volatility, and we believe that we'll be compensated adequately enough for the returns with regards to the risk that we assume in the fund.
Tatenda and Grant, thank you very much for your time.
Thanks, Andrew.
And thank you for tuning into Black Onyx. You can find more details on us on our website.